They're probably going to cheat again and find a way to correct what they say is a flaw in the methodology. They'll say, oh, we need to make it more accurate, which is just a lie, meaning to make it less accurate, but just to make the number lower. But they'll probably end up having to concede that 2% is just too low. Where'd they get 2% anyway? They got it from the Reserve Bank of New Zealand that came up with a 2% ceiling, not a target. And the idea was if inflation got as high as 2%, that meant that the central bank needed to do something about it. But as long as it was below 2, that meant that it was okay. So it didn't mean that 1 was bad or a half was bad. It just meant that 2 was too much. But that somehow got turned into a target, like we need 2. If we don't have 2, all hell's going to break loose. But the whole number is very arbitrary. And so if they can claim we need 2% inflation, they can say, 2% is not enough. We need 3 or we need 4. Well, we need it like a hole in the head. We don't need any inflation. The government needs inflation and the central banks cooperate by creating it. On the margin, Harris is worse than Trump. The deficits are going to go up under either administration. We're probably going to have higher taxes. If it's Trump, it'll be through tariffs, which are taxes, and contrary to what the Republicans claim, will be paid by average Americans. But average Americans need to pay more taxes. If we're not going to have massive cuts of government spending, then the government has to collect more revenue. Tariffs are a better way to do that than through higher income taxes. Income taxes are much more destructive to the economy than tariffs. So if it's a choice between raising income taxes or imposing tariffs, I'd say tariffs. But my first choice would be massive cuts to government spending. But neither candidate is proposing that. Harris is proposing a big expansion of government spending. She wants the government to give everybody $25,000 to buy a house, $50,000 to start a business, $7,000 to have kids. Where's that money going to come from? And, neither candidate wants to cut Social Security, Medicare, Obamacare, government pensions. The Republicans want to increase defense spending. The Democrats are all about warfare spending. They want to perpetuate wars. At least Trump wants peace. Peace is cheaper than war. So any way you look at it, it's better to have Trump. But I think that the most important distinction, because the economics is not that big, it's just a cultural. It's the freedom of expression, freedom to oppose government. That seems to be what's more on the ballot, because the Democrats want to stifle all that. They want to stamp out individual freedom. They think that we shouldn't be able to criticize government, that we shouldn't be able to say things that they don't like. They call it, well, it's hate speech. No, it's not. It's just speech that they hate. And disinformation is the truth, right? When the government is lying, the truth is disinformation. But you never want the government to be the arbiter of what's truth and what's not. You want people to be able to speak their minds. And if they lie, well, let the market expose that. Let other people come up and criticize that. If you're trying to stifle somebody's speech, it's probably because what they're saying is true. And the only way you can combat it is to prevent them from speaking. Ideally, we'd have a complete separation of money and state. I'd like to have the free market determine what money is and let the government collect taxes in whatever the people are transacting in. I don't like the government to just be able to conjure money into existence out of thin air that has no fundamental value to it. So that's the inherent problem in our current monetary system, the fact that we don't even have any money. It's just all based on fiat. But I think a central bank digital currency would be just even worse than what we got now, because I think the government would have even more control over the money if it were digital, because at least when it's physical in paper, if you transact through the banking system, through your credit cards, debit cards, PayPal, things like that, yes, the government can figure out what you're doing, but you still have a way to be private and you can use cash. I'm not talking about, I'm advocating for criminals to be private. I'm just willing to tolerate that so that honest people can have privacy. And that's what keeps the government honest, because if they know that people have no privacy, they're more likely to oppress them, because they know that organizing any kind of resistance is more difficult. So we have to preserve some individual liberty and a right to privacy and the ability to transact, not because I want to do something illegal, but because I don't want the government knowing every legal thing that I do. And of course, they may criminalize a lot of conduct that is perfectly legal today. And what the government does would be illegal. The government would be unconstitutionally outlawing what should be lawful. And in that case, it's the government that's the lawbreaker. But the government, if they take away our cash, then they make it more difficult for us to get around their unconstitutional laws. But that is where they're going, and of course, it'll be even easier to manipulate the economy, because if they could just load up our digital wallets with cash that has an expiration date, they could really say, okay, everybody go out and spend right now. And if you don't spend your money, it's gone, and really try to micromanage consumption spending, because they always try to stimulate the economy. But of course, the stimulus doesn't work, but they do it anyway. Certainly, the BRIC nations are building a new monetary system brick by brick. It's going to happen. I mean, they're going to supplant the dollar. It's only a question of when, not a question of if. The timetable, I think, was accelerated by the Biden administration's sanctions against Russia, which really was a wake-up call to the world that you need to get out of the dollar, that you're too vulnerable. You're basically beholden to the whim of the United States to impose sanctions on you if they don't like something that you've done. That should be particularly problematic for the Chinese, because we're constantly criticizing the Chinese. It doesn't make sense for them to put themselves in this position. So obviously, they're going to be moving away from the dollar. That's why the price of gold keeps hitting new record highs, even though American citizens have been selling their gold all year. So have a lot of other Europeans. It's foreign central banks and people in the BRIC countries that have been buying the gold that Americans have been selling. And they're doing it for a reason. They're going to keep on buying it. The price is going to keep rising. Eventually, the American investors who sold their gold are going to try to buy it back. Of course, it's going to cost a lot more money. And people who never bought any gold are going to start buying gold. And so then, the prices are going to start to move up much faster. I mean, so far it's been a very slow, orderly ascent. There's been a lot of doubters, a lot of naysayers. The gold stocks, the silver stocks, are dragged behind very reluctantly. Every once in a while they make new highs, but then they get clobbered the minute gold goes down $50. It's like, oh my God, this is it. It's going to crash. But once we really get, north of 3,000, 4,000, who knows, you're not going to have all that negativity surrounding the gold bull market. People are going to accept that gold prices are going up. And it's really not gold prices going up. It's the value of the dollar and other fiat currencies going down. When our republic was formed in 1789, you only needed $20 to buy an ounce of gold. When we formed the Federal Reserve, well over 100 years later, in 1913, you only needed $20 to buy an ounce of gold. And even as late as 1970, you only needed $35 to buy an ounce of gold. Now you need $2,600. It's not because gold has changed. It's exactly the same. It's the dollar that's changed. It's worth a lot less because we have so many more of them in circulation relative to how much gold we have. And the rate at which dollars are created is going to increase exponentially in the years ahead. And so gold prices are going to go parabolic. I own a lot of gold mining stocks myself. It's by far my biggest sector that I have in my personal portfolio. And I added considerably to that position earlier this year, back in February, March, when gold was still close to 2,000 but above. And Barrick and Newmont were hitting multi-year lows based on downgrades by Wall Street. I hadn't anticipated buying more, but I don't look a gift horse in the mouth. And so I took what the market was giving me. But, I think that these stocks are historically cheap. The sentiment is historically negative. I love being a contrarian. Normally, how do you buy gold stocks when gold's at an all-time high and be a contrarian? Well, you can, because nobody expects gold to stay at an all-time high. People expect it to go down. And, for many, many years, the gold mining stocks were the ironic victims of inflation. And people just assume that that's the new normal. And why they were victims of inflation is inflation drove up the cost of mining. But the price of gold didn't go up as much as the cost of mining it. And that was because people didn't realize that inflation was actually as bad as it was. And so that hurt gold mining profits. Even though, yes, we can sell our gold for more money, it's costing us even more to get it out of the ground. Now that gold is finally broken out of this consolidation that it's been in since 2011, I think that gold is going to outpace the cost of mining it. Especially now, like I said, oil has never been this cheap priced in gold. That's great for the gold mining companies because that's a major input. Also, their wages, the dollar has been relatively firm, and so the wages are low compared to where they would normally be with a big gold rise. Normally the dollar is falling against a lot of these currencies where the wages are denominated, but that hasn't happened. So I think these companies are in great position. They've also cleaned up their balance sheets over the years, paid off debt. They're generating tons of cash right now. The big companies trading at ridiculous valuations relative to what's historically been the case. I think there's going to be a major consolidation in the industry. I think a lot of the smaller companies are going to end up getting bought up by the bigger companies because they're not going to have much to do with all the cash. It's going to be a lot cheaper than funding exploration projects. Just buy up some of these super cheap companies and get a sure thing instead of gamble. But the fact that we've had so little investment over the years in exploration and development means that when the gold price is 3,000, 4,000, 5,000 higher, you're not going to see a lot of new gold coming to the market to take advantage of those higher prices because the industry just doesn't have the ability to produce it. It's going to take time to bring a lot of these mothballed mines back into production, and it's going to take even longer to find more gold. So we're not going to see a big increase in supply. We'll see some, but nowhere near the increase that we're going to see in demand. And where does inflation come from? It comes from the Federal Reserve monetizing government debt. Government deficits have never been this large, and so we're going to have more inflation than ever before. It's just a question of when does the Fed go back to QE, and I think it happens early next year. The rate cuts are just the beginning. The QE is the next part because the Fed wants to get long-term interest rates back down. It wants to help the housing market. Just cutting short rates isn't going to do that. In fact, long-term rates are likely to rise despite these rate cuts because they are inflationary, and the Fed does not control the long end of the curve, which has to price in the higher inflation that results from the easier monetary policy. So I think at some point, the Fed is going to go back to QE in order to artificially suppress the longer end of the curve because it can print money and buy those bonds to push down the yield. But that's just even more inflation. And so it's coming. The politicians are not leveling with the public. They're saying we don't have to have any cuts to government spending. We can get all the Social Security we were promised. In fact, we can get more. Donald Trump says, hey, we're not even going to tax your Social Security benefits. So we're going to get more Social Security benefits. We're going to have lower taxes. Well, that means we're going to have higher inflation because we have to pay for government somehow. And it's clear the only way politicians are willing to charge us for government is through inflation because then they can blame it on somebody else. They don't have to accept the responsibility because they didn't physically take our money. They just took our purchasing power by creating money, and now they can blame it on, greedy businessmen or Putin or speculators or whoever is the scapegoat of choice, but they won't accept responsibility. So we're going to have a lot more inflation. I do think that the Fed's rate cut cycle is going to get aborted before they get back down to zero. I mean, I don't know that they'll make it all the way back down because I think that foreign exchange markets may not cooperate, and we could go into a free fall with the dollar. Inflation could really start to get out of control, and so the Fed may have to start hiking rates in order to stop it. I've been recommending the emerging markets, and this has been a hell of a week. Last week, we finally have seen a big move. We've been overweight a lot of these Chinese names, and there's a lot of value in the emerging markets, and the markets are now just starting to recognize that. This new stimulus out of China was a catalyst to kind of wake up a sleeping giant here. I don't think the stimulus is a good thing, but it's just that the market was so cheap that, it was just looking for a reason to go up because everybody had left it for dead, particularly the Chinese names. But I like emerging markets. I like businesses that will benefit from a weakening dollar, and emerging markets will thrive in a weak dollar environment. They're hurt by a strong dollar because they have a lot of dollar debt. So you have a lot of emerging market companies that owe dollars, and as the dollar goes up, it makes repaying that debt more difficult. But as the dollar goes down, it's like large amounts of debt are just forgiven. They're wiped out. So I think that's going to be a good environment for those economies. It's going to keep their prices lower on a relative basis. And so I want to be in those stocks. I want to be in other resource-related names, energy, agriculture, companies that do well with inflation, defensive stocks, companies that produce products that people have to buy. Even if the price goes up, they'll keep buying them. Tobacco stocks, as an example. I mean, people, if the price of cigarettes goes up, you're not going to quit smoking. I mean, you should quit smoking, but the people that haven't quit yet, they're not going to quit. They're going to keep on smoking. And if the price of cigarettes goes up, well, they'll just have to cut back on something else. So, we own those companies, and, we own a lot of companies, food and beverage type companies, pharmaceutical companies. Look, people are sick. They're going to take drugs. The government's going to fund this. So, you're going to cut back on other things. So you want to have portfolios of goods and services that people are going to need, they're going to buy. Even if they buy less, they're going to buy. And, companies that are not expensive on a PE basis, that pay good dividends based on actual income, not, pie in the sky companies that, well, we're going to make money in 10 or 20 years if all these great things happen. One of the reasons that the stocks trade at a discount because people are worried that the U.S. will just outlaw the ownership, which isn't really bad for China. It's bad for Americans because it's the Americans that lose the ability to own these assets and Americans who are forced to sell them at a fire sale price. It's a huge win for whoever gets to buy the stocks from the Americans who are forced by their own government to divest. But it is something that keeps the prices down now because Americans are worried. And a lot of advisors, fiduciaries are worried about taking these positions and then being forced to sell them. Because when you're forced to sell something, there's generally a low price because the markets take advantage of the fact that you're forced to sell. But, it's terrible when the U.S. government does that. You should be able to invest your money wherever you want. And it doesn't actually hurt China to say that Americans have to sell the Chinese stocks that they own. How is that? I mean, this is a market. It doesn't affect. In fact, it may benefit China if the Chinese get to buy those stocks back from Americans cheap, right? So it doesn't even work. It doesn't even accomplish. Now, if you said, hey, we're not going to let the Chinese come to our capital markets and raise money and sell stock, okay, that might do something. But if you're talking about stock that is already out there, that's owned by an American citizen, it doesn't hurt the Chinese company if some American citizen has to sell his stock, for a low price to some German or somebody else who's not sanctioned. It's whoever doesn't get sanctioned gains whatever the American loses. But in all this, too, is unconstitutional. They get away with it. You have freedom to invest your money and buy whatever assets you want. Doesn't matter if the U.S. government doesn't like the policies that the Chinese government has. You still have a right to own that stock.